Good morning, everybody. This is Market Michael here. So we are back with some economic data coming out. 8:30. Initial claims, continuing claims, Philadelphia Fed. So let's go over initial claims and what that really means. Now, initial claims means that it's refers to a report that measures the numbers of jobless claims filed by individuals seeking to receive jobless benefits. Um, The initial claims number is watched closely by financial analysts because it provides insight into the health of the economy. Policymakers use initial claims figure in conjunction with other employment data to determine strength of the labor market. Higher initial claims correlate with weakening economy. Initial claims typically rise before economy enters a recession. A decline before the and decline before the economy starts to recover. Initial claims report. Okay. Okay, the strength of the economy impacts the appreciation or depreciation of the USD and other currencies. So, higher than expected reading is interpreted as a negative bearish for the USD, while a lower expected reading is considered positive or bullish. Obviously, lower than expected. So, but what we're looking at here is a slight decrease. Now, we've expected a pretty big decrease, but what we're actually seeing is just a 1K decrease. And now, why is this so bearish? Is because the economy is almost reversing. We're almost getting more jobless claims, and we're getting who are looking for unemployment. So this means that the economy is very sluggish and is about to turn the other way around. We're about to start increasing. That's what that number says. Now look at here, same thing here. We just got pretty much slightly lower than expected for continuing claims, which is kind of bullish in a sense because it's less than the prior month slightly, but whatever. Now, the Philadelphia Fed came out with some economic data, and they're coming out with economic data later in the day, the conditions index and initial claims at 10 a.m. But we're just going to look at the April Manufacturing Business Outlook Survey, which says we are sluggish in this forecast here, folks. We're slowing down. We're sluggish. This is exactly what they're said. It says they want to spin it. They said we're positive. We're positive for new orders. The indices for current new orders and shipments remained positive but fell 17 points and 9 points respectively. So we're sluggish and we're coming down. Now as you can see, we're lower than these 2014 highs and we haven't been able to get there. So what does that indicate? That indicates that we are in for more drop-offs. Look what happened here. So we spiked up and we came down and we came down again. So we're going to come down again and probably hit this go close to the zero mark, and at that point we're going to you know, I mean, they're just saying recent stuff. We have ticked up from a bottom. Looks like we got higher lows, but it doesn't matter because the long-term trend is down. Price indexes suggest increasing prices. Oh my God, look at the inflation here. I mean, we're close to peaking out here. So usually with these peaks, you probably come back down fast, but still that we're experiencing major price inflation and raising of prices. So let's just check this out. But that's also because of gasoline, guys. That's because of gasoline. Oil's up significantly, and also we've checked this out before, and we are getting inflation in the supermarket, but it's some of it is you know more of it is it's all bad. It's all bad, guys. Okay. Firms remain optimistic. Future activity decreased from 47.9 to 40.7 this month. Nearly 50% of the firms expect increase in activity over the next 6 months. New future orders index fell 12 points, while further shipments index rose 5 points. Slightly more than 68% of the firms expect price increases for purchased inputs over the next 6 months. 50% of expect higher prices for their own manufactured goods. 42% of the firms expect to add workers over the next 6 months. That's not necessarily true. I mean, probably 42%. So more than half of the firms are not looking to add employment. Although future employment index declined 3 points, it remains a high reading. Yeah, I don't think that's going to continue to be the case. So they're spending more money. Over 27% of the firms indicated that the tax changes had positively affected planned capital spending for 2018. 19% were not sure. 71% indicated that majority of the spending would occur in the second half of the year. That's probably not true. Summary. We don't even want to look. I just gave you a summary, guys. Yeah, we don't. Fuck this poll. We got the data. That's all that matters. So we covered the data. We've done our good deed for the day. Now check out these charts. This is a 4-hour chart, ladies and gentlemen, and this does not look good. This looks completely bearish. We got a parabolic SAR ball on the top, and we are going down. It doesn't seem like we can hold it all. We've dropped below that level of support there on the S&P, and we're continuing to make lower lows on the Dow, S&P. We are in this trifecta. It doesn't look like this bull momentum is like heating up again. We're at this almost at this underbought level, but I think we're going to continue to pass through it and continue to ride along the bottom of underbought because the markets they are completely failed this outbreak of resistance here. Although we're only down 26 points, I think once the market opens, we are going to get a hell of a lot of selling. So be prepared, guys. Let's check this out. We're looking at a daily chart. Now, I'm pretty sure we are dark green across the board, and that's going to indicate our first come down. Now, I just, you know what, give me a round of applause, guys, because, 5 days ago, I called that this would be a pivot point. I thought we were going to get a two-legged pivot point, but it looks like this is just going to be one big whopper. And 5 days ago, I was able to tell you where the resistance levels were and what was going to happen. We've popped above this of critical levels of resistance, and we've failed the next level of resistance, so we're going to come back down and we're making lower lows in which I predicted. I walked you through the fact that the tricks and the MACD are both under the 0 percentile line, indicating weakness in a bear market. Relative strength indicator is much weaker than the previous spikes. And let's see, volume is dropping off on that bullish volume, which indicates that no one is wanting to buy at these levels. So overall, I think the sentiment is negative, and well, here we go. We're we're still positive on this daily. Actually, for this, I guess we're just bouncing, but I'm pretty sure this is going to be a continuing trend. Let's look on an hour chart just to set the record straight. So look guys on the hour chart while I edit these, put them all on hours. We pretty much just kind of fell off. So this hour chart it looks like we're going to go back up, but I don't know. We've had an extended period of selling already, and I think this is just the start of it. I'm not really, I could be wrong. You look here, gold is backing down, so that's kind of strange that gold is backing down. The 10-year, no way. The 10-year shot up. It's 29.4 right now. That's the 10-year. Markets can't handle this. That's what's the problem. Look at that bond market, guys. TNX, that 10-year. Oh my God, I wonder what the freaking 10-year to 30-year spread is. It's not that much. I've been doing the wrong spread, guys. I've been doing the 10-year to 30-year. We were supposed to do the 2-year to the 30-year. I mean, 2-year to the 10-year. But let's go ahead. I'm just going to pull up the Dixie and note any changes we should be falling heavily on the Dixie. You know, yes, we are falling very heavily on the Dixie, and looks like we are going to go ahead and retest lows, and also that data is not good for it. I mean, I don't know why gold is failing. All right, it's just another transition, so it looks like we're gonna have to transition for 2 days, but we could get a spike in gold because there is no other place to put your money. Sorry guys, I'm just examining other different charts just to give us a look. So silver is continuing its run up here. We're at 1736. A pretty awesome run here. Now we went from 16 to 17. So God bless silver. That's beautiful. But we're pretty spiked out here on the CCI, and it looks like we're possibly gonna come down on a 30-minute. On a daily, let's see what's going on here. On a daily, we're peaked out and we're coming down. So it looks like we're almost making lower highs. If silver could just break out and get hit some really high highs, that would be that would indicate that it's on a bullish momentum long term up. Well, with all this being said, I'm gonna have to let you guys go. You guys go ahead, do your thing, enjoy this lovely day. Now, I do expect markets to decline. I told you that this would be a pivot point 5 days ago. 5 days ago, I said this area would be a pivot point. I thought we were going to go higher, but it looks like we're going to go lower. These hour charts are already undersold, so almost undersold. So that's kind of a weird indication that we're almost oversold, and yet I think we're going to continue. But the last week or so had not unfair bearish momentum. I mean bullish momentum, unfair bullish momentum. The momentum on the bull side outweighed the bear side almost every day, and it it just didn't seem right, guys. It didn't seem right. Alright, we're at a 12-minute video. We are continuing to decline, and if I pop this up on a 4-hour, guys, you are going to clearly see that we are headed downwards. Look here, guys. We have just started this negative MACD, so we are going to enter this downward momentum. Let's see if the momentum changes for good. If we get a foothold here to move higher, we're going to have to see. I'm assuming that we have made a new low, a new higher low. No, sorry. I'm so sorry. We've made a lower high, and that means that we are still in a bearish momentum. So we have to see where we get support and what this market does. Let's leave it at that. So thank you very much, guys. This is Market Michael. Please like and subscribe if you enjoy this content, and I will see you a little after market open. Take care, guys.